REI show, always trying to give back. And of course, the first thing that I try to focus on most is relationships. And so, if you haven't done so already, please check out Startup REI show, where five top angel investors are basically discussing what they think about angel and real estate investing. And for today, actually, I have a guest on, and his name is Scott Kallick. If I didn't butcher that last name, Scott Kallick is an angel investor, and I'll bring him on now to talk about himself because I'm so excited to have him on. What's up,
Good morning.
Scott?
And it's
Good morning,
Alex, but it's okay. I
Scott
answer to both.
Kallick.
Answer to both,
Got
but
it,
it's okay.
got it, got it. I appreciate you being here. I know, I mean, this is what I pulled off from LinkedIn that you are all kinds of things. You're an angel investor, life business leadership coach, a husband, a dad, outdoor person, a dog lover, and I'm sure you're also a person that loves giving back. So, can you tell us a little bit more about yourself, maybe?
Sure. Yeah. Thank you. I actually I have a 30-year career as a business owner. I started my business in my late 20s, and just a small little boutique business, and over 25 years built it up into a large, you know, large mid-market, best in class, best in service company.
Okay.
Um, we grew into 14 states, had a successful exit. Went to work for the acquiring company for about 4.5 years until I realized that corporate life was not my bag. And
Hmm.
and then at that point, I went back to school. I got a coaching certification. I really
Okay.
decided I wanted to start working with, um, you know, uh, people, early stage startups, entrepreneurs, founders of
Pre-seed.
businesses,
Okay.
and that's kind of what I've been doing since. And yes, I do some real estate investment. It's actually a substantial amount of it as well. So
Oh, that's something we'll deep dive into because that's really what I'm trying to help broadcast out there more. The education piece of startup investors, or not only startup investors, but people in the startup world to have that foundational aspect of wealth, which is usually comes from cash flow. But that's just something. Let's see. Your background is amazing, and out of all the titles that you put out there, I know you're human too. So at the deepest core, can you talk about your why you do what you do, why you enjoy what you do, why you're passionate about it?
you know, the journey of entrepreneurship to me was, a um, foundational journey. I mean, really the deepest journey that I've had, the most growth that I've ever had. In doing that, I mean, I learned amazing lessons every single day in doing that. And for me, when I see people trying to start a business, my soul goes to them. And those are people I really want to work with. I'd love them to have the same. I mean, nobody's got the same journey as I have, but I'd love
Right.
them to have a similar journey. Where they can, create equity in their lives through their businesses and have that opportunity when they're ready, to cash out on it or just, to pass it down to other generations.
Hmm.
It's a wonderful thing to do, and it keeps you engaged every single day, every single minute of every single day, and
Yeah.
it's just an incredible thing to do. I remember when my dad, I was growing up, my dad told me, he said, you owe it to yourself to have your own business, and
Correct.
and I did it, and I threw myself into it. And I was completely involved in it. I was, at every level, I was into it 24/7, and it just to me it's something I believe anybody who wants to do it should have that opportunity. And I'm here to help them. I'm here to be with them. I'm here to walk.
Thank you. Thank you. That's funny because I'm actually one of them, and pertaining back to like the mission, vision, and values of an entrepreneur, I've reached my 1 year anniversary. My company's 1 year anniversary as a private equity, a real estate private equity at that, and it's been a roller coaster, probably like 12 depression breakdown stages. Seeing the bank account just rack up in credit, not seeing any results, but I know I have this huge belief that it will rack up later on. But I'm also realizing too that I initially valued, or I initially prioritize giving back after I made it. Let's say 5 years, 10 years from now, when I make that $1 million. But someone reminded me during this whole 1 year journey that if you're trying to make a lot of money in 5 years and then doing good, that's not a great way to do it. You should be doing good now in the present moment, and that's kind of what not only this platform allows me to do with like having a genuine conversations with people that have already made it and then understanding their point of view. But what's your take on that as a learning curve?
It's funny. I have conversations with potential clients a lot, and some of them come to me and say, "Hey, my real goal is to make 5 million or 10 million or 20 million,"
Yeah,
and that's okay. But the people I really love to work with are the people who say, "I have this passion, I
yeah,
have this passion, and I'm doing what I love to do every single day." And
yeah.
when I wake up in the morning, I know exactly what I want to do that day. And those type of people, the money's going to follow them because they just love what they do and they have the passion and they have the charisma, and people are going to follow them, and
Yeah,
they're going to make it.
yeah. No,
Whereas
I
people
appreciate that.
chasing money, it's kind of a hollow thing.
I mean, being honest and transparent here, I was initially in it for the money because like um, I was basically in survival mode, even until now. And the more that I talk to people like you that have already been there, it's coming to the point where yeah, the money doesn't. It does matter as a base, but after you make a certain point, that's it. It's like what will you do, and it's a human aspect now that matters more.
When I started out, I drove a ratty used car, had a couple 100,000 miles on it. Um,
Yeah,
I mean, I was renting an apartment, and as time went on, yes, the money came. We started becoming lucrative. I,
correct.
I wasn't, I didn't take a lot of money out of the business. I kept kind of putting it back in because I
Yeah,
believed that equity was for me. That was
I
that
got
was
it.
that was where I wanted to be. But you know what got me through is every day I woke up and I was happy. Like I was happy because I knew I had a mission. I knew I was
That's
serving
perfect.
people. I knew I was making people's lives better, and I was happy. And it just the growth of the company happened. Um,
Yeah,
and yeah, the money came, and there's nothing wrong with wanting money. It's okay,
correct, correct.
but
No,
priorities to me, if it's money first, it may be a problem for people.
correct. Yeah, I'm glad I've somewhat transitioned into that mental state of just like just give and it'll just follow kind of thing. Thank you for that. So right now, what do you value most now? Since you've already made it, right? What do you value most now?
You know, I love, I love working with. I mean, really, I love what I do every day. I love working with, with founders, with young businesses, to help them get to those next steps, to help them get clarity on really what they want and who they are and how they become more powerful people, how they can move all the junk out of their head, to get where they
Oh,
want.
that's the biggest one there.
Yeah,
The the
yeah, it
mindset
can
one.
be. Yeah,
Yeah. No, I really appreciate that. I thought, I wanted to talk about more on like real estate and the investment side, like the capital investment returns and like due diligence, but I don't think that matters as much as the actual mindset. And that's something I want to dive into, if that's okay with you.
sure. I love real
So,
estate.
would you say?
I said I love real estate. Or
Okay. Well, in this, we can dive into that more
no,
too
no,
then.
no. I'm sorry. I thought you wanted to transition to real estate, but no, fine. I'm really happy talking about what we're talking about.
Thank you. In these different times, inflation is a huge bubble now. At least maybe my statement was a misstatement, understatement there. But how are you going about making decisions as a passive investor or as an active one at that during these changing economic and political conditions?
You know, I mean, inflation's. You know, you have to stay ahead of inflation. So when you're looking at something, you know, I mean, I always look at a benchmark of 10 to 11% is what I want to get as a passive investor. And I feel like if I can stay there, I'm going to be okay. And I like to get into real estate deals that are going to give me, quarterly returns at, you know, an annualized 10 to 11%.
Okay.
Well, some of them I see, they'll start at 3.5%, 4% the first year, and move up 7% the second year,
Right.
12, 15,
Then-
17,
Mhm.
and that's okay. That for me that works. I'm not in a hurry, but I do like to put my money to work.
Got it. Got it. And so, are you a GP yourself in startups, or do you run a fund at all? No.
I don't run a fund. What what I do is I kind of have a unique model. I invest with some of the companies and the founders that I work with. So typically, I might charge X amount of money. If I'm working with a founder and I'm not invested, but if I'm invested, I might charge maybe 40% of that money, but then I take some advisory shares in their company.
Got
So
it. Got it.
if they grow, my equity grows in their company.
Since you know too well about not only the startup realm but also the real estate, I want to ask you this: deep down, IPO or cash flow?
I'm a cash flow guy. All day.
Really?
Yeah.
Let's talk about that. Why? Why? I know IPO is like exponential growth, but
Well, you know what? Let me back up a little bit.
okay.
No, like when I invest in real estate, I'm a cash flow guy. But when I invest in a company, yeah, I mean, I'll take equity and yeah, with the expectation as I work with them that the value of the company is going to grow.
Yeah.
So yeah, I mean, and a lot of times you're waiting 5 to 7 years, to cash out on something like that. But yes, you can get huge returns.
If you don't mind me asking, I have to assume that your portfolio is diversified and into these two main assets. But how much, if you could, in general terms, how much is it going? How much of your portfolio is in real estate or startups?
Um,
And what's the general rule that you would advise other people that
I wouldn't advise it. I
by
wouldn't advise
preference?
anybody to do what I'm doing.
Why
This is
so?
something that's comfortable for me. Typically, I'd say about 40% of my portfolio is in stocks and equities, and probably about 35% in real estate, and then probably about 5% in crypto, 10% in you know probably 5 to 10% in startups.
Got it. And so, if you don't mind me asking, if I see that yours is very much diversified, can you talk about the importance of that and in weathering the storms, cycles, and stuff like that?
Yeah, I mean diversification. Look, if I was all in stocks and equities right now, I'd be tearing whatever hair I have left out. You know, I
Yeah,
mean, it's great when it's going up, but in times like this when things are when things are rocky, it's
correct.
really tough. But and crypto as a rule has been kind of following the stock market.
Are you also in NFTs at all? This is
I don't have any NFT. That's something I'm in some funds, and I've some funds that I have invested in NFTs, but I don't understand it well enough myself to really make independent investments there.
right. So I'm hosting an event and I'm planning on giving out NFTs to make it more community based, but that's off the scope of this topic here. But that's probably something we talk about later on.
Yeah, I'd love to. Yeah.
And is it typical for, let's just say, an angel investor to have some sort of their majority of their portfolio in real estate and only like 10 and lower than that, unless they're like a professional in it, like a VC fund manager? I spoke to a super angel in here and he said that 30% of my net worth is in angel investments because that is my career. That's what he
Yeah.
does full time. I understand that.
Yeah.
But for angel investors that are just new or a little seasoned,
Well,
Is that a general rule? How's that?
well, I don't know. I mean, like the thing is, my 10% in my angel investments that could grow to 30. I mean, if I had a unicorn somewhere, I mean, that could grow to 30 pretty easily.
Have you gotten a unicorn?
I have not yet.
Not yet. That's
But
the better answer.
it's going to come. I
Yeah.
have to think positively about this.
And what's your typical uh, X multiplier for a unicorn? I guess it would just be if the company went $1 billion in valuation.
No, I mean, I would say if you get to like 100x, that's
100x. That's the thing.
a unicorn.
I'll take a note of that.
I mean, that's look, someone else may have a different definition. That's the way I look at it.
Yours.
Okay.
Okay. Are you currently looking at investment deals in real estate?
I'm always looking at investment deals in real estate.
Really?
I'm in about 20, 22 deals in apartment complexes.
Syndications, if I may ask.
I'm sorry.
Syndications or
Mostly LPs. Yeah.
okay.
A couple of syndications.
And are they? I guess I'm asking more for your due diligence of like, what do you look for in regards to capital investor returns, investor experience, and outlook, and when you want that time frame of the investment?
I diversify. Like I have a couple of apartment complexes I own on my own.
Okay.
I have a couple that they've said, hey, we're gonna have a 4 or 5 year hold here, and then we're gonna sell it we project to sell it at a 1.6 or 1.7 multiple, and we're gonna pay you 10%. During that time. I have a couple that are longer term holds, maybe 11 or 12%.
Are you a buy and hold guy or?
I pretty much buy and hold. Yeah. I mean, look, once you're in these deals, you're pretty much in until they
So that's the thing in my investment. Well, so giving you a little background here, I do work with an owner and a syndicator that has like 1,600 plus doors now, and I was part of 117. And in that, I'm realizing that the properties trade within 5 to 7 years, and the investors want their money out, right? But I'm trying to find out if like there's more people that want to do buy and hold strategy and essentially just do a JV instead of a syndication model. Do you get what I mean?
Yeah.
But that would assume usually institutional, if not like a single big check, big fish investor that puts in the money. Is that something that you do, or what are your thoughts on that?
Do I put in the big money toward these things? Is that what you're asking me?
Is that something that you would be interested in doing, like an actual buy and hold? So instead of selling it in 5 years, because that's what usually happens, to trade, we would just refinance it, and then everyone keeps their equity shares, for example.
Oh yeah, I'm in several real estate deals on that model. Sure.
Wow, I want to do that instead of looking around for the next deal after that one just closed.
Well, yeah. I think that's a viable strategy. Like, you hold the property for 4 or 5 years, you refinance it. You refinance, you take money out, you give the investor back. I've gotten, I've gotten, almost 150, 175% of my money back, and then I continue to get, I continue to stay in the deal and get 10% of my money. Those are great deals.
Dang. Okay. Is that more attractive to you than, let's say, like I think it was like an 18% IRR for the,
a lot of
likelihood of 6 years?
A lot of real estate people, they make it sound sexy, like, okay, this is going to be a 18% ROI or IRR.
Yeah.
So
what matters to you?
It's not, because it may be over 6 or 7 years where it's not really that great of a return. So yeah, I'm looking at annual returns.
Okay. If let's say it's 15% annual return. Actually, I never mind. I understand what you're saying now.
Yeah. So yeah, storage. Storage deals. I'm in 7 or 8 of those. Those are equally as good as as apartment deals, and it also depends on who's running it. I mean, that's an important component as well. I want to have someone with who's had experience, who's I want to see what their track records are.
Awesome. Would you be interested in taking a look at our deals?
Sure, absolutely. I love looking at real estate deals.
And I actually want to know from your perspective what's good and bad. So
Yeah.
we'll go from there. And then, so how can people reach out to you if they have any more questions?
Love to talk to people. You can find me on LinkedIn.
Yep, I got it on here.
I'm like the only Scott Kallick on LinkedIn. Might be another one. You can email me, Scott@scottkallick.com.
Okay. I think I have it here.
Yeah.
Perfect.
Happy to, love to see what people are up to.
Yeah, we do. We need to talk more. I really appreciate you being here. And
I loved it. I really enjoyed it. Thank you for inviting me.
yeah, I have more questions because I really dude, man, I love your energy. I just appreciate you being here. I'll definitely connect with you more.
Love to come back on and love to talk to you privately. So.
Definitely. Thank you very much, Scott.
All right.
And
Okay.
appreciate you and your time.
Okay.
I'll end this.